Hey, I hope you're doing great and your week has been great. So today is Thursday. We're just about to close this week and everything shall be all right. So I hope this week has been good for you, not because you'll be having profit or anything, but because you'll be learning. Okay, I always tell my students or my those people I mentor that an L for me is not a loss. An L is a learn. Okay, so choose however you want to make it seem like, but make sure your L is a learn. Okay, so I hope this week you learned a lot from the market. Remember, the market is the best teacher. There's nothing that a mentor can tell you that the market will not tell you. Okay, yeah, the market is what teachers, even those mentors, then they come tell you what they've learned. Okay, yeah, so before we actually go far, make sure you subscribe to my YouTube channel. Help me grow so that we also keep moving together, and also hit the bell icon so that you don't miss out on any video I upload anytime. Okay, so I want to give you or to go through a post market analysis of Audcad. I had done this analysis previously, and I shared the analysis to those people who were on my, sorry about that, who are on my WhatsApp community and my Telegram community. It's a free community, by the way. The link is on my bio, so make sure you also join so that you don't miss most of these entries. Okay, let's go over this. Now, first of all, you can see Outcard on the higher time frame. We are very bullish because we switched we switched character around here, so we are bullish, and that is why by the way, before you do your analysis, you have to look at the higher time frames so that you see the bigger picture, or you see what you should be anticipating for. Okay, so the higher time frames are telling us that we are bullish. So what we do is we look for a bullish setup. Don't ever trade against the trend. Okay, the market will punish you if you defy it. So make sure you're trading with the trend, never against the trend. Okay, yeah, so we are looking for bullish setup. By then we had already had this forward demand right here get respected. You see price dropped this demand correctively. You can see there's an expansion and retracement expansion till we got to this demand, and then you can see it respected with that bullish momentum. Then right now we had created another new 4-hour demand right here, and people, of course, or people who trade smart money or supply and demand, we're expecting to see price drop to this 4-hour demand, and then we have it respected. Of course, that is what most people will be expecting, but let me teach you something today. Okay, so you can see right here we had a market structure shift right here, a bearish market structure shift. But this one is an internal. This is that we are talking about the internal structure. But bearish market structure shift, a break of structure, break of structure, break of structure, and then a last break of structure. So this is our last break of structure, and then next is followed by a market structure shift. Okay, if the low created by the market led to a break of market structure, and then instantly a market structure shift. Listen to this keenly. If the low created by the market created a break of market structure and then a market structure shift, almost the same time there is there is strong liquidity that is resting below that low. Okay, there is liquidity that is resting on that low that has to be swept. Okay, so I marked this as my unswept liquidity right here. And most intendedly, the market is always hunting liquidity, and if the market is hunting liquidity, you have to trade from major liquidity zones. Okay, because from major liquidity zones there will be resting orders, and if there are resting orders in the market, for the market to move, we have to see those resting orders. They are the ones that give us momentum in the market. Okay, so there was resting liquidity right here at this point, so I was expecting to see this liquidity swept before we have the market move. So these are forward demand. Of course, there is no problem, but if you took your trade from this forward demand, it means you'll have to place your stop loss far about 30 pips from this unswept liquidity, and you see that is not good uh, because one, you'll be risking too much in the market. And what if the market goes against you? You see, you'll be losing a lot. You'll be losing a lot of money, a lot of pips in the market. That is why you should opt to go in this trade after this liquidity strip. Or rather, you can also wait to see a change of character either in the market. So for example, we see the market get to that forward demand and then go past the sweeps the liquidity, and then we see now we wait to see a change of character on the lower time frame, something like that, for example. So these will be our, let me just mark for you. This video is going to be a bit long, but I hope you, yeah. So this will be our break of structure, and then we have these as our change of character. Once you have these now I'm talking about the internal structure on the 15 minutes time frame. Okay, don't get confused. This is now what you'll be expecting either on the 15 minutes time frame or on whichever lower time frame you'll be looking at. And then now there will be either a demand that is left here in after the formation of the change of character. That is now when you'll be expecting to see market drop to this point and then you buy. Okay, so these are confirmation entry. Now this one is even better, but for me, because now I'm a swing trader, I love using, or I mostly use what limit orders. That is why I opted to go in at the unswept liquidity, and you can see we are garnering a lot of pips. This is very nice. This is about 120 pips, right? This is very nice. We're just about to smash our take profit, and then I can do another analysis on the same pair. But I had done this analysis and I posted it on my WhatsApp community and my Telegram community, as well as the banned TikTok account. Yeah, but I know we'll grow again, right? So that is it for now. Make sure you also back test or look at this on your charts so that you understand. Don't just trade because I said this works for me. It might not work for you. Make sure you refine it, or for you to make it your own edge. Make sure you do back testing so that you understand the entries, you understand the pros and cons of this setup and how it works. Okay, that is it for now. If you've not subscribed to my YouTube channel, make sure you subscribe, George FX Mastery. If you're on YouTube, you can just hit the subscribe button and the bell icon so that you don't miss out on any video. If you're on TikTok, you can just opt to follow me. I'm at less than 100 followers, imagine. Yeah, so George FX Mastery is our name everywhere, either on Instagram, Twitter, TikTok. We are not on Facebook. Yeah, and on YouTube. That is our name. Yeah, so that is it for now. Make sure you backtest this strategy as I said, and remember, never ever give up. You're just one trade away.